thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into explaining what's driving rates on any given day, and sometimes it could be coming from headline news or a combination of that with uh, um, economic calendar or geopolitical. Sometimes even the market sentiment changes, where sometimes good news is now bad news, or vice versa. So we try to get in there and provide an explanation for those who are following the real estate news or mortgage rate news to see where rates are going. Try to give them an explanation of what's going on here so that way they can hopefully make either one, just to keep the knowledge going, see what's going on, or perhaps you're looking to refinance a purchase and want to lock in and determine when's the best time. And hopefully this will give you the information that you need to make an informed decision for yourself. A little bit about myself is I'm a loan officer. I do work at the National Lender. We're here to we do loans in all 50 states, so we can certainly help those of you who are looking to purchase, get your pre-approval and buy, or even refinance. But more than that, we're also here as a resource for you. So we're here more to answer any questions you might have, or any questions regards to mortgage rates or programs available out there. We're here to help anything of the pretty much of that nature, or anything that you have out there. We can certainly try to get that information for you folks. So without further ado, we'll just jump right into my report. We'll start off with our economic calendar. We do got two items here. The first is the existing home sales for the month of January. So in December, we had 6.18 million seasonally adjusted units. That got revised slightly lower to 6.09. Forecast was supposed to show a slight uptick to 6.1, and it shot right past it, 6.5 seasonally adjusted units there. So million units. So that's a very good number, especially beating the forecast by 400,000. So that's awesome right there. That shot up 6.7%. Now the last item here on the calendar is a leading indicator. This kind of gives us gauges short-term economic activity over the next 6 months. And the previous month, back in December, it was revised slightly from 0.8% to 0.7%. And then forecast was supposed to be slowed down because of the Omicron, inflation, and a bunch of those stuff that was happening in January to 0.2%, and it actually decreased by 0.3%. So we had a complete almost shutdown in month of January according to leading index indicator. Uh, Here, I'll talk about the rates here. We're up about 9 basis points currently, uh, and stocks are in negative territory. Why? Well, what's been kind of hitting the headlines mostly this week is news on Ukraine and Russia. The tensions have been escalating over there. Here's the volatility we had today. We're up here, we dropped up a little bit, drop up, down, and we're up again. So we're kind of at pretty much at the highs of the day so far. So 9 basis, or it looks like now it jumped up to 11 basis points. Um, so pretty much at the highs of the day so far. And of course, we be a little careful. It's not quite enough for a price. To improve our price on what we saw after yesterday's close. But if this continues, we could see some price improvements out later in the day. I would not be surprised because of the tensions that are growing over there and concerns that potential of a invasion that we see a lot more money. Because what happens is when stocks are in negative territory, that money is being pulled out. They're selling and they're repositioning it into mortgage-backed securities and treasuries, and that's kind of helping us out in the short term here. This will be probably most likely a short-term resolution here, so I wouldn't rely on this to help us for a long term. So just be careful of any possible traps. But for short term, this is kind of helping us out moderately right now. And because we got a 3-day weekend coming up here with President's Day on Monday, the markets will be closed. A lot of money will probably go into bonds because it's considered a safekeeping. It's a flight to safety, is what they would call that. And so this is kind of helping us out. So we could potentially see some price improvement at some point today. At this point, we're not quite yet noon yet on the West Coast here, but so we got a few more hours to go. But again, we could potentially see some improvement as we just went from 9 basis points to 11 basis points. As you look at the 10-year Treasury, where we moved down, we even crossed that technical level, which was a floor. Now it's our ceiling. We're down to just down to 1.92 now. So that's good news too. After we were just touching the 2% mark for a few days there earlier in the week, and now we're down to 1.92. So lastly, we'll touch base on what's the average conforming loan limit, our loan rate, and right now on the 30 is at 4.09, 15 years at 3.34. These do have points built into them because typically when we quote rates, it'll be by an eighth of a percent, 0.125 of an 8%. So that's why you see these a little bit different. So these do have points built into them, and these are just the average rate for a conforming loan limit. Now, if you've heard some of my past videos, we did discuss what goes in variables that go into a rate. So not all rates fit the same. If you'd like to get a rate quote, just feel free to reach out. We can certainly talk to you a little bit about giving you a rate quote and help you guys out in that scenario. In the meantime, if you guys like these videos, please help us out. Smash that like button and share us. We greatly appreciate it. Any assistance you guys can help our channel out. And if you guys got questions, again, we're here to help. We're a resource, so please feel free to reach out. You guys have a great rest of your day. Thanks so much for watching. Enjoy your long weekend here, and we'll see you guys on Tuesday. Bye-bye.